welcome back to this YouTube channel. So I think this week I received an email from Ndovu, and it is about Kibaba Special Fund. So they are also rolling out a special fund for Ndovu, and it got me thinking. I think special funds are gaining a momentum here in Kenya, and what is a special fund? So for someone who's never heard about a special fund, what exactly is a special fund? So that is what this video will be focusing on. So a special fund, first of all, I must say this, as of the third quarter of last year, the assets under management in special collective investment schemes, it surged to 137.8 billion shillings. So that tells you that many Kenyans are gaining momentum and they're in the know about these special funds, and most of them are venturing into it. So this is something to be on the lookout for. So a special fund, it pulls capital from investors with moderate to high risk profile who are seeking a diversification and higher returns. It mostly targets someone who already has an emergency fund and is looking for a way to accelerate their wealth. That is, in simplest terms, how I can define a special fund. So while a traditional, let's see, should I say money market fund? While a money market fund, it focuses more on bank deposits and the treasury bills. The special fund is allowed to, it is more aggressive, it is more versatile. It can venture into different things, both in the country and outside the country. So, and I think that is what drives them to make higher returns. Last year the returns from the special funds, most of them were ranging from 18 to 25%, which is very good returns. So it is something you should look into as you do your own research and probably venture into it in the coming days as you come to learn more about it. So, what are the features of a special fund? So number one is the global reach. It can invest in offshore commodities. It can invest in different things: gold, oil, derivatives, private equities, global technology, offshore stocks. Look at the S&P 500. And then it employs complex strategies. It can make money in winning and how will I put this? It makes money when stocks go up, when stocks go down. It can buy, it can sell, and that is how they make money, as compared to the traditional money market fund that only makes money slowly, and it can only make money when it goes up. But this one, you make money both ways. Whether it goes up, it goes down. So that is something to be on the lookout for. And then it also has higher returns and targeted risk. As I've told you, market fund is currently at 10%. If you get a better one, maybe 11%, but 9 to 10%, while the special funds, they're ranging from 18 to 25%, So, and most of them have a lock-in period. So it targets those who want wealth acceleration. That is why I've said you should first of all have an emergency fund, which is the money market fund, where you can withdraw your money any day, anytime, compared to these special funds that have a lock-in period. Most of them have a lock-in period of 6 months. And then they have a sophisticated entry. For most of the special funds, I think one of the cheapest special funds is Avocap, which offers a minimum entry of 100,000. The rest, talk of Mansa X has a minimum entry of 250,000 shillings, Oak Special Fund, 500,000. The Etika that, if you watched my video yesterday, where I was talking about the Etika Multi-Asset Fund, it has a minimum entry amount of 250,000 shillings. So you can tell that the capital, it is a bit intensive. So it is most of those who are looking to accelerate their wealth, who are in the know-how about this investment and the investment world. That is how I can put it. But then they have the management fee. Let's not forget that, about 5%. It is being dealt by with a specialist. It is a specialist handling your money. So, but the management fee compared to the returns, a net return of about 18%. Let me explain this in layman's language. I think we all know the 72% rule, where the return, the duration it takes for you to double your amount of money, you take 72 divided by the interest rate. So if the interest rate is 18%, do you know what that means? It means if you invested 1 million shillings, 72 divided by 18 is 4. So that means in 4 years you'll double your money. So if you invest 1 million shillings in 2026, in 2030 you'll have 2 million shillings. And then you have 2 million shillings. That is if you do not withdraw, you do not touch the money, you just let it accumulate. And we are assuming a constant interest rate of 18%. Sometimes it is higher, which is better. So in 2030, you have 2 million shillings. Do you know how long it will take for you to double the money from 2 million to 4 million? The same amount of time, 4 years, which means you've taken half the amount of time, 2 years, to make 1 million compared to the 4 years that you took previously to make the 1 million. So in 2034, you'll have yourself from 2 million, you now have 4 million. And that is how it continues. So it takes longer for the money to accumulate initially, but with time, time is on our side when you're doing the compounding formula. And then the other thing, the last thing I want to talk about the special funds is the regulatory safeguards. Of course, we do not want to risk all our money and lose it. Most of the funds are appreciating, they're doing well. Of course, there's the highest risk. And the past performance does not guarantee future returns. We have to keep that in mind. Past performance does not guarantee future returns. So the regulatory frameworks, of course, it is regulated by the Capital Market Authority. And it is required to have 3 things: a fund manager, the custodian, and the trustee. So let us just to know who is the fund manager. A fund manager decides the strategy and makes trades, but they do not physically hold the money. Etika does not physically hold you. The special funds, they do not physically hold your money, but they decide the strategy and the trades. Yeah. And then the custodian, it is a licensed bank that physically holds the trade. It is now the bank that holds the physical assets. Let's put it that way. Maybe gold, maybe oil. And then they have the trustee, who is a watchdog. So it is an independent legal entity that acts as a watchdog to ensure the fund adheres to the Kenyan laws. So that is it about special funds. I hope we are now in the know about special funds. And as we research on maybe which fund you'd like to join and all that, maybe stay tuned. We'll be talking about the different funds that are available here in the Kenyan space and what are goods, what are the red flags, and what can we venture in. So stay tuned, like, comment, subscribe. Thank you so much for the returning subscribers in this channel as we gravitate towards the financial knowledge and know-how. Keep tuned, stay tuned, and let us educate each other. In case you spot something, keep me in the know in the comment section. I'd like to read that. I'll be following through. And share to your family and friends, to anyone who this information will resonate with, that it can help. That's it for today.